All right, so IBKR Desktop is a new platform that Interactive Brokers has launched. It's a beginner level, intermediate level platform. We're going to go through order entry today. We're going to talk about how to place orders, really a solid understanding of how these stock and option orders work, how to read the details, and how to really get the most out of the platform. So I think you're going to enjoy it. Let's jump right in.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description.
All right, so as we pull up the platform, here we're just on the portfolio page, and obviously I have it empty at this time. I'm going to click to the next one, which is watch list, and let's just fill this up a little bit. Let's hypothetically say we were going to buy a stock. There's a couple of ways you can do it. You can right click and it will pull up options, or you can just go under the ask column to buy or under the bid column to sell. So let's just say we were going to buy some Amazon. I click on that and you can see the buy order here on the right hand panel. Here we would change the details. Maybe I want to buy 200 shares. I want a limit order, and I want to make sure that I pay no more than $183.15. If that's the way I want it to look for the day, I go ahead and submit the order. We'll double check our work. You can see it would be $36,000 worth of stock and so forth, and then I submit the order. Now, as we look at this, as I come back over to my portfolio page, over here on the second button, you'll see orders. And now we're going to see this open order for Amazon that's out there and it's working at this time. Now, if I wanted to adjust it, I can do it directly from here. I can right click, go to modify, and then change the details and change the pricing and so on. So here I'm working off of a delayed data. It's not live data like you'd normally have, but let's just raise the price a little bit. We'll resubmit the order and then away it goes. And again, as soon as Amazon stock hits that price or lower, that's our limit, that's the highest we're willing to buy for, this order would execute and it will show up in our positions tab at that point in time. Right now it's not showing up there because it's just a working order. Next, let's say we wanted to short some Tesla. I'm going to click on the sell button. Maybe we want to short 100 shares, again a limit. We want to short this at as high a price as possible, and maybe we want to make sure that we short it at 177 per share or higher. I'm going to go ahead and leave that as a day order, but here I'm going to do something different. We're going to attach some orders to it. And this is kind of a cool feature where you can attach to your order a take profit or a stop loss or whatever you want. So let's say I wanted to attach just the stop loss, not a take profit. We're just going to let it run to the downside and make us money in the short stock. But I want to protect myself in case it's going higher. And maybe we've done the homework on this and we know that we want our stop loss up at 182.37 per share. So I select the stop loss. And then normally, of course, we're going to change that to a GTC, which is a good till canceled order. Now, here's the cool feature here. I'm shorting 100 shares of stock and I have an automatic buy to cover stop loss in place. These are trade 1 and trade 1A. Now this order, they call this first order a parent order and the second order a child order. If the first order executes, then the child order goes live to the market. But this order, this stop loss, won't even be live to the market until the first one executes. Now, notice we just got a pop-up. We got filled on our 200 shares of Amazon that just came through. Let's go ahead and submit this sell order to short some Tesla. I'm going to transmit this order and away it goes. Now, if I come back over to our details, notice as I go into the portfolio, we're the proud owner of 200 shares of Amazon. And then if I go over to my working orders, I can see this Tesla order, and the sell order, the attempt to short it, is live, but the stop loss is not live. Again, it's like it's just sitting there, and they call it a one triggers other. This first order triggers the second order to go live. Maybe we need to adjust our price. So again, I'm going to modify, and we see that maybe the stock's a little bit below 177. We'll nudge it down 176.90 and resubmit. We're still leaving our stop loss in order at the same price and so forth, so we can adjust the parent order. The stop loss is still just waiting for that first order to execute before it will go live. So we'll just leave that there, and that's a working order. Now if I come over to my balance, we can see some details here of how much margin we're using. Of our $1 million portfolio, we're using 12,000 in initial margin. We have a lot of buying power still available, as you can see right there, and so forth. Now, let's come back over. We'll go back to our watch list, and let's place some option orders. So I showed you how to buy stock, I showed you how to short stock, I showed you how to put stop losses or take profits by simply clicking to attach those. Let's say we wanted to trade Microsoft, but we wanted to do it in the options. So I'm going to pull up an option chain for Microsoft, and here we can point and click to build a trade. So let's say that we wanted to do a July, and maybe we'll do a couple of different examples, but hypothetically we're bullish on Microsoft. Stock's at 430 per share, so we're probably using options that are closer to at the money, closer to the stock price here. And maybe we want to just buy a simple call spread. So we're in the July expiration, 50 days out. Notice the little pop up there. We got filled on our short position in Tesla. We'll go back and look at that in a second. Now, if you wanted to do a single leg trade, you could just point and click on one. But if you want to do a spread trade or a multi-leg trade, we need to have the strategy builder selected. Once you have that selected, we can hit the buy button to buy the 430 call. Maybe we'll sell the 440 call, and we'll build a simple bull call spread. So here it has it built. Now you'll notice there's a bid price, a midpoint, and an ask price for this spread. And we generally say that the value of this trade is really more in the middle. So if we were looking at this trade, we would say, okay, the best we could hope for if we wanted to get in this trade right this moment would be, hopefully we could pay somewhere close to 480. If we wanted in and we didn't care about price, which we do care about price, but if we didn't, we could just submit an order and get filled at 510 immediately to buy. That is the sellers. That's the asking price. The truth is more in the middle. We can probably get filled somewhere closer to 495. So I'm going to go ahead and click on this, and then I probably would be closer to the bid or the midpoint. We want to get a good execution price. So maybe we'll sweeten the bid just a little bit. We can see buyers are at 480. We're not going to pay the midpoint either. We're going to try to pay 485 for this spread. And if we can get filled, you're going to see what this does. So we're going to buy one contract of the spread at 485. That's $485. I'll show you here. So let's hit the preview button. As we preview, this is important. We always want to double check our work and make sure, okay, I'm buying the lower strike call, selling the higher strike call. That's what I want. It's going to cost me $485 plus a couple of bucks in commissions perhaps. It looks good. I'm going to go ahead and transmit the order. Now this order is pending. So we have a spread trade out there. Maybe we want to trade EA, let's say. We're bearish on Electronic Arts. We think it's going to go lower. That's probably based on charts and expectations that the trend is lower and so forth. Well, if we expect this stock to go lower, we'll come back to the option chain and maybe we'll build a bearish spread in EA. And in this case, we'll just do a simple vertical. Maybe this one we want to go out 30 days. We're going to use the puts, but again, I want to hit the strategy builder because we're going to do a multi-leg trade. We're going to buy one, sell another in this case. So stock's at 132. Maybe in this case, let's go out 30 days. Maybe we'll buy the 130 put and click to sell maybe something like the 125 put. So now we have a June 28th, 130, 125 bear put spread. How much is this spread going for? Well, to buy it, buyers are trying to pay 85 cents. Sellers are trying to get 115, and the truth is probably more in the middle. I'm going to go ahead and click on it, and I'm going to change my price. And maybe in this case, we'll try a midpoint. Maybe we're willing to pay that dollar for this trade. That, we're just buying one. Well, I don't know. Let's switch it up. Maybe we'll buy 3 of them. Maybe your risk tolerance is to risk $300 per trade, or maybe it's $500. Maybe we'll buy 5 of them. Because as you see, if it costs $100 per spread, if we buy 5, that's $500 that's going into this trade. Now, importantly, your reward potential is much greater than that. You're risking $1 per spread, but you can make $5 spread minus the $1 cost. You could make $4 in profit. $4 in profit times 5 is $20. So you're risking $500 with the potential to make $2,000 in profit. Double check our work. Buying the higher strike put, selling the lower strike put, everything looks great. I'm going to transmit the order, and away it goes. Now, let's go look at our portfolio. We got filled on the 2 stock trades, but it looks like the option trades are still pending. So notice under the status column, you have filled on the Tesla, you have filled on the Amazon. Now, this one is a stop loss. It's submitted. It's now live. That's our stop loss on Tesla. Maybe we need a stop loss on Amazon as well. So let's go add that. We'll go sell our 200 shares with a stop. Always your stop losses are good till canceled. We want it out there day after day after day. And then we're going to put in our stop loss price. Now, because we bought the stock, our stop loss would go below. We're going to stop the loss if it's going down. Maybe we've done our homework and we think 179.45 is the right price for the stop loss. If it goes down there, it's going to kick us out of the trade and we're out. Okay. We will, again, we can preview, sell our 200 shares with a stop, good till canceled. Stop price is at 179.45. Everything looks great. We transmit and away it goes. So now notice we've got a stop loss on Amazon and we've got a buy to cover stop loss on Tesla. And the reason this is a buy stop is because we're short that stock. We've got a working order in EA and we've got a working order in Microsoft. Now, this one is pending. Let's take a closer look. So we'll modify this order, and it looks like the bid ask is still around those prices. Let's go ahead and bump it up more towards the midpoint, more towards that $5, and we can retransmit that order. Generally speaking, if your prices are in the midpoint, your probability of getting an order filled is pretty high. It's not a guarantee by any means, but it's pretty high because you're splitting the bid-ask spread, you're meeting in the middle, and all you need is for someone else to kind of come and meet you in the middle. Now, that doesn't mean it'll get filled every time, but it will get filled quite often at the midpoint, and of course, it will get you a better price than just submitting market orders and so forth. So now you can see how these orders would be out there. Our balances, of course, would change. Our margin that's tied up in these positions has increased. We obviously have more at work as we're building these out. Now, Let's say that we wanted to trade maybe a stock that's not listed here. Let's say we wanted to trade PayPal or something in the financial space. So I'm going to type in PayPal symbol, go ahead and hit there. Maybe, what if you didn't know the stock symbol? Well, you can usually do a lookup like Square. Well, it used to be called Square. The company's name is now Block for blockchain, but it used to be Square. So if I didn't know its symbol was SQ, I could have just typed in the company name, right? And then it helps me to find it. There's Square on the New York Stock Exchange and so forth. So even if you don't know the symbol, if you punch in the company name, it will help you. If you didn't know Home Depot was symbol HD, well, you can do a search. Home Depot, there's HD trading on the New York Stock Exchange and so forth. Let's say we were going to trade PayPal, and again, let's do an option trade. And in this case, we're going to do a little bit more complex option trade. Maybe we're going to do call ratio back spread or something. So I'm gonna go, actually before we do that, I'm gonna hit strategy builder as always. And maybe we're gonna sell the 60 call. We're gonna buy the 6250s, but we're gonna buy 3 of these. So call ratio back spread. Now you get a different style of risk graph. Of course, here at Maverick, we teach you all these concepts, the education, what a call ratio back spread would be used for. But as the risk graph is showing, it is a very bullish position, and the higher the stock goes, the more money you make. Again, the midpoint we can see is around 302. We would probably be closer to that or better for buying this trade. We would preview the order. Let's make sure we're getting what we want. Do we want to sell one of the 60 calls and buy 3 of the 6250s? Yes. Do we want to pay $3, which is $300 for this trade? Yes. We go ahead and we transmit the order, and away it goes. Now we come in and look at our portfolio. Still only have the stock positions, but we have some option trades pending. Let me give you a little bit of word of caution, though, when it comes to simulated trading. Now, here's the good news, bad news of it. The good news: simulated trading, they don't have as much technology. If you ever say, boy, the live platform works a lot better than the simulated trading, that's the good news is the live platform does work better. And the simulated trading, the bad news is, well, it's just they don't put as much time, as much money, because it's not making them anything, right? But it's a great practice tool. We can screw around and do things like this in simulated trading accounts and not care about the money figures because, well, it's not real money. So simulated trading, a little clunky. Here's the other aspect of it. When you place trades in the simulated trading and you try to get filled at the midpoint, a lot of times those orders will not execute. In fact, most of the time. If you want your trade to execute in simulated trading, you pretty much have to pay full price. You have to get the worst price. In live trading, it's not that way at all. In live trading, when you split bid-ask spreads, you'll get filled quite often. So I just know from experience that if you want this order to execute, you pretty much have to go to what the market price is, what the asking price is, in order for it to execute in the simulated portfolio. So if we go ahead and adjust these such that we're paying full price, the full asking price and whatnot for the spread, then we would probably get filled on the orders accordingly. So we don't need to do that in live trading. Again, working the midpoints will quite often get executions. So we've taken you through this process of placing orders for stocks. We've placed orders that are pending for stop losses. We've shown you how to take profits. We've shown you how to place option trades. Maybe the last thing that we'll show, how would you exit these trades? Well, the easy way is if you already have stop losses on these, you could just come in, and if you know you want out right here, right now, we could modify the stop loss, and basically instead of waiting for it to go up to 182, you could just say, nope, I'm out here. I'm ready to be out of this thing and just essentially turn it into a market order and submit. Move your limit price, your stop price down so far that it executes immediately. That sort of idea where you could even change it. You could even, well, maybe we'll do that with Amazon. You could cancel the stop loss and then you could say, nope, I'm just ready to sell all or most of these shares. Let's just say all at the market. If for some reason I just wanted out of everything, I could come in here and just cancel the stop loss, sell my 200 shares at market or at a price that will basically execute immediately. We'll put it even below the price so it'll execute, submit the order, away it goes. And so we can adjust the stop loss or execute orders that will go through immediately. And there you can see we just sold our 200 shares of Amazon. Or on this buy stop, it's still pending. We could again just cancel it. We could come over and say, nope, I'm ready to buy back my 100 shares of Tesla. We're short the stock. Let's just get out of it. You should be able to, I'm not sure why it's not letting me select market, but you could normally just do a market order, or you can move this limit price down so far or put it so high that anything below it will execute to buy. And as long as it's below that, it'll execute. And since it is below, down here at 176.59, the order executes and away it goes. Now as I come back and look at this, now we can see, well, we made a little money. It's way too, you wouldn't want to day trade like that, of course, but it's a good educational example. We shorted the stock at 176.90. We bought it back at 176.59. That's a profit. You shorted high, you bought it back lower. In the case of Amazon, we bought when it was at 183.20, and it looks like we haven't sold yet, so we need to modify. We'll move this down to a price that will just execute immediately. Again, it's kind of hard to know where the market's at because it's delayed data. Okay, we sold at 182.97. We lost a little bit there. Why? Well, because now our position's gone, but we bought Amazon up at 183.20. We sold it and got filled at 182.97. So we lost 23 cents per share in that one. So a good educational example of how to place stock orders, how to place option trades. You can see that in placing these orders and in doing the executions, it's a simple platform to utilize once you get the hang of it. And the great thing about demo trading is just click around, just mess around with it, get familiar with the process and the program. And if you make a mistake, it just doesn't matter. It's a practice trading account. Hope you enjoyed today's video. Have a great week, everyone. We'll see you next time.